Hello everyone and welcome back to Stock Market University. Today we're going to be looking at exponential moving average or EMA. We're gonna understand how they work, why they work, and how to incorporate them into our trading. EMAs now are basically exponential moving average. There are also other moving averages, the simple moving average or the SMA, the Hull moving average or the HMA. But EMA is the most commonly used, and again, going with the same logic as we have been so far, we're just going to focus on the most used indicators. What EMA does basically is it puts a little more preference or priority, more weightage on the recent candles to calculate its value. Now, here I just went into the indicators, typed in EMA. It's in my favorite, so it came up on the top for me, but it's a pretty popular script otherwise as well. This one, EMA 20, 50, 100, 200. You can find it easily. And when you do, you'll get these four lines on your screen here. Let me just edit these real quick to make them easily visible. Now, the orange one, or the red one is the 20 EMA. The orange one, this one is the 50 EMA or the average of the last 50 candles. The light blue one is 100 EMA, average of the last 100. The dark blue one, average of the last 200. Now, of course, these do work on every time frame. You could go down to 5 minutes if you want to trade with them on intraday, but let's stick to 4 hours for this video because that's just a really nice in between time frame, not too long, not too short. It's really a good way to judge an indicator's performance. The 4 hour time frame is. Now, what we're looking for here in terms of EMA, the most simple thing you could do is take a higher weightage EMA, say the 200 or the 100, and just look for share or stock prices to interact with it, which it did here. As you can see, took a little bit of resistance here at this level, where the 100 and 200 light and dark blue EMAs were converging. Also took support on the 50 EMA, the orange one here, as you can see. So the share is very reactive to these, as you can clearly see here as well. And when a stock is either above or below all of these averages, especially in higher time frames such as the 4 hours or the daily, is where this really matters a lot. When a stock price is above all of the four together, as well as they're all in order, say if the stock price is above them and they're in order of their magnitude, which is 20, 50, 100, and 200, as they are right now, that is signs for huge bullish momentum. And what we could do here is say when we're on a daily chart, so when they do cross over and get aligned in order of magnitude, as they did for the positive side here, as we can see on around this area, the convergence happened and they were aligned for the positive direction. The stock price stayed here for a while, consolidated. We could have drawn a trend line as we learned in the candlestick patterns episode. And soon as there was a breakout here, a trade could be executed because again the EMAs were in order. We could have confirmed it with the volume, which didn't really say much at this point, but again, the combination trades, combining and making strategies out of these individual indicators will be done more in the future episodes after all the basic stuff is out of the way. Now, as for the EMA, the 20, 50, 100, 200 combo, what one could do is look at once they're in order, you could look at entry opportunities whenever it retests lower EMAs. Say it was the convergence happened here, the stock price is mostly above it, Then you go ahead and look for retest of levels such as this one. It retested the orange 50 EMA here, and we could go into the past of the share as well and confirm if it does react well to the 50 EMA, because all stocks in this matter are different. Some react to the 50 EMA, as we can see with this one. It reacts to the 50 EMA well. It has done so here, here as well, 3-4 times in the recent past. So we could comfortably take a position here when it retested it in this go. And when we would, of course, we'd see great bullish momentum afterwards. Now, say you missed that opportunity. When it came back down again, you might look here and go, when it came back down, and one would have, according to the strategy, taken a trade here. When it tried to test the orange line, maybe it taken it in this candle. When it did try, it did sustain above it. But soon as this line breaks, you got to exit your positions and wait for the next test. The next test again happened at the light blue, paid out a little bit, but this stock ended up going quite a bit all the ways down to below the blue, the 200 daily exponential moving average, the DEMA as some people like to call it. But since has reversed above it again, and of course the convergence has happened again. So again, it's entered into great bullish momentum. If we're going to see a retest again of the 50 EMA, I would be looking to take a position here in the stock because it has reacted well to the 50 EMA in the past, as we discussed here, here again, here. And of course, we can look at the other way as well, where the magnitudes were reversed because stock price was under these four lines here, the four EMAs, and they were in order of magnitude in the opposite direction, where the smallest one is at the bottom, 20 red at the bottom, orange 50 above it, light blue above that 100, and the 200 dark blue above all of them. So that's in reverse order of magnitude. As you can see, 20, 50, 100, 200. Stock price is below it. Again, whenever it retested these upper levels of this convergence here, or maybe the 50 EMA, the orange line, because this stock reacts well to it, you take a short position. Say at opportunities like this, like this, like this, when it tested the 100 actually. See, even this share, sometimes it tests the orange line, sometimes it tests in between the blue and the orange, sometimes it tests the light blue exactly. So you really got to be careful with your position sizing and when you're trading in these higher time frames, because of the extra volatility in the markets, sometimes these flat levels don't work out too well because stocks are driven up or below them, up above, beyond, or below them on purpose just to take people's stop losses out. So you got to keep that in mind. And we'll talk about an indicator which actually lets you place your stop losses in such a way where you can beat the effect of these fake breakouts and such, which are basically created to drive small money out of the markets, get them to hit the stop losses. That indicator is called the average true range, but we'll discuss that one in a later video because it is a pretty complicated indicator and don't wanna, mishmash all the knowledge in this one, right? So these were in opposite order of magnitude. We saw a great downward momentum as you can see here. All right, how about we look at one more stock now and change it up a little bit to show you another very interesting strategy. Actually, I'll look at the DJI. Something guys, Dow Jones Index. Now, what you can do as well, especially if you're looking at smaller time frames, instead of looking at the 20, 50, 100, 200, because these are more rigid numbers, as you can see, the stock reacts well to these. But if you're needing say smaller time span EMAs to take faster trades on intraday basis. You don't want to take too large of stop losses and such. You want quick entry, quick exits. What you could do is instead of the, let me just hide the 20, 50, 100, 200, type in EMA here again and type in 8, that 8 slash 21. There we go. You see this one, first one up here. So what you could do is type in Fibonacci, sorry, Fibonacci EMA 8, 13, 21, 55. This first one by Patrick.kt. You could add this one on it. These are now Fibonacci numbers which react very well in the markets, and these EMAs are based on those. So then again, if you want quicker exits, quicker entries on intraday basis, these could work out well for you. As you see here, price basically sticks to a lot of these quite often, quite a bit during intraday moments. This could also work on 30-minute charts, let's say. Again, you can see great. It really just sticks every few candles, every 5 or 4 candles. It has to just go ahead and test back at the 8 EMA, which is the purple line here, and the yellow as well once in a while. So these are just really attractive for share prices. You can use these as supports or resistances to, execute your trades. If your conviction is towards the top side because of volumes or just the spread between these EMAs themselves, if they're far apart in any one direction, that can suggest momentum as well. And you just take the trades whenever it retests the purple line here, like so. So well done. When it retests the purple line, you can take the trade and write it for profit. If you look at this chart, actually, if you just rode the purple line, you could have seen great profits from 34,000, in fact, all the way up to here, 35, 400, 500, without really ever dipping too far below the EMAs, the Fibonacci EMAs. All right, that's the basics for EMAs, guys. I think we covered a good bit of them in this video. I'll do an advanced video on this topic as well. Cover a bit more in depth how to strategize involving EMAs into our strategies and executing trades on their basis, along with the ATR and involving all of that stuff in our analysis as well. Until then, guys, thank you for watching. Let's keep learning together. If you did like this video, please don't forget to like and subscribe.